Now that we've prepared our direct materials budget, our direct labor budget, and our manufacturing overhead budget, we can compile the information from those three lower level budgets and make our cost of goods sold budget. In the cost of goods sold budget, we are going to calculate the total manufacturing costs that will be incurred to produce the budgeted quantity of units, again by taking the cost of direct materials, direct labor, and manufacturing overhead. Here is our cost of goods sold budget. In the first row, we have our beginning inventory. This is our beginning inventory for the year. Well, if we go to our production budget, we see that in the first quarter, we had bags in beginning inventory of 9,000. Those 9,000 bags, according to our information on the chalkboard on the left-hand side, cost us $1 to produce. So the cost of our beginning inventory was the 9,000 bags we have in beginning inventory times the $1 per bag that it costs us to make them. Therefore, our beginning inventory has a total cost of $9,000. We don't need to worry about the second, third, and fourth quarter because beginning inventory is only for the year, so our total beginning inventory was 9,000. Next, we have the row for our bags produced and sold in 2019, and these were produced at a cost of $1.05, which we just figured out. What we're going to do for the first space is we are going to figure out how many of our units that are going to be sold in the first quarter were actually produced during 2019. Well, we're going to sell 100,000 bags, but 9,000 of those bags weren't produced in 2019 because they are our beginning inventory at the beginning of the year, which means that only 91,000 bags that are going to be sold in 2019 were also produced during the year. We know that our cost of goods sold per bag, we just figured out, was $1.05. So to figure out the cost of our bags produced and sold in 2019, we simply take our 100,000 budgeted bags to be sold, subtract from it the 9,000 bags that we already had in beginning inventory, and multiply those 91,000 bags that we produced during the year times $1.05. This way we come up with $95,500. That is our cost of goods sold for the bags produced and sold in 2019 during the first quarter of our year. Moving on to the second quarter, we plan to sell 110,000 bags. Fortunately, all 110,000 of these bags will be produced during 2019, so we can just simply take the bags to be sold and multiply it by our cost of goods sold for those units, which is $1.05. We come up with $115,500. For the third quarter, we plan to sell 120,000 bags, again at a unit cost of $1.05. So we multiply 120,000 times 105, and we come up with $126,000 cost of goods sold for the units that we sell during the third quarter. And lastly, in the fourth quarter, we plan to sell 1,000 bags of chips. Those 1,000 bags of chips still cost $1.05 to make, which means we will have a cost of goods sold during the fourth quarter of $105,000. All in all, that means Saratoga Chips is going to have a cost of goods sold for the year of $442,050. To find our total budgeted cost of goods sold, we simply add the cost of beginning inventory to the cost of bags produced and sold in 2019. 9,000 plus 95,500 means that our total budgeted COGS for the first quarter is 104,500. In the second quarter, we don't have beginning inventory, so we can simply carry down the $115,500 from our bags produced and sold during the year. We can do the same thing for the third quarter and the fourth quarter, respectively. For our total budgeted COGS, we just add up the four numbers in our total budgeted cost of goods sold row, and we come up with $451,050. This is Saratoga Chips' budgeted cost of goods sold for the year. We are through our COGS budget, which means we can move on to all of our other expenses that were not related to production, and those are tracked in our selling, general, and administrative expense budget. This budget predicts the expenses that the company is going to incur which are not related to production. Things like rent on an administrative office, advertising, and insurance costs that are not related to production. Here is our SG&A budget. This one is basically given to you in the information. We start with our administrative costs, and we know that Saratoga Chips will pay $24,000 in administrative salaries each quarter. We simply take that $24,000 and we fill in each quarter in our salaries expense row. Saratoga Chips is going to pay a total of $96,000 in administrative salaries during the year. For rent expense, we are given in our information that they pay a $2,000 monthly rent on their administrative office. Well, if we take that $2,000 a month and we multiply by how many months are in the first quarter, which is 3, we find out that Saratoga Chips is going to pay $6,000 in rent during the first quarter of 2019. That number is going to hold true for the whole year, so we're going to fill in each quarter with $6,000, meaning the Saratoga Chips had a total rent expense for the year of $24,000 on its administrative office. For insurance costs, they have a $300 monthly insurance cost on this administrative office. We're going to use the same concept. We're going to take our monthly cost of $300. We're going to multiply by how many months are in the quarter, which is always 3. $300 a month for 3 months means that in the first quarter, Saratoga Chips is going to spend $900 on insurance for their administrative office. And this number is going to be the same each quarter during the year, giving them a total insurance expense of $3,600. For depreciation, our information tells us that Saratoga Chips is going to depreciate its office equipment by $800 each quarter. We can simply fill in $800 for each quarter, bringing us to a total depreciation expense of $3,200. For supplies expense, Saratoga Chips believes that each quarter it is going to use office supplies equal to 2% of that quarter's total net sales. Well, that means we're going to have to go to our sales budget and figure out what our net sales is for each quarter. During the first quarter, Saratoga Chips had total net sales of $245,000. Our supplies expense is going to be equal to 2% of those total net sales. So we take $245,000, we multiply it by 0.02, and we find out that Saratoga Chips is going to have a supplies expense during the first quarter of $4,900. During the second quarter, our total net sales were $296,450. We take that $296,450, we multiply it by 2%, and we figure out that Saratoga Chips in the second quarter will have a supplies expense of $5,929. We're going to use the same concept through the third and fourth quarter. We're going to take our total net sales, we're going to multiply it by 2%, and we're going to determine what each quarter's respective supplies expenses. So $6,468 for the third quarter and $4,900 for the fourth quarter. This is going to give us a total supplies expense of $22,197. To figure out our total budgeted SG&A expense, we simply add all of the numbers in the column for each quarter. So in the first quarter, our total budgeted SG&A expense is equal to $36,600, $24,000 plus $6,000 plus $900 plus $800 plus $4,900. We're going to add each column for the successive quarters, so our second, third, and fourth quarter, giving us $27,629 in SG&A expenses during the second quarter, $38,168 for the third quarter, and $36,600 for the fourth quarter. In total, they're going to have a budgeted selling, general, and administrative expense of $148,997 for the 2019 fiscal year.